Hey, this is Sut from PriceIsKing.com. Thank you for purchasing this course. I'm going to be going over Module 2 on trading candlesticks today. This is part 1 of learning how to trade with candlesticks. So I'm going to go over in this lesson just a brief understanding of what candlesticks are, how to use them, and then in Module 2 you'll get a pretty detailed understanding of all the different patterns that come across in your day-to-day trading with candlesticks. So let's get started. This is part 1 of my comprehensive stock market trading class on candlesticks. Okay, so let's get started. What is candlesticks? All right, so candlesticks is nothing but a time representation of what happened to price during a given time period. Okay, so let's just take an example right here. You have a candlestick that is red and green, and what that represents is red means that it was a down candle, a bearish candle, and a green means that it was a bullish candle. And what does that mean? Okay, so what that means is, let's take with the red candle. All right, during each candle represents a time period. And what do I mean when I say time period? A time period is when you're looking at a chart, when you're looking at a 5-minute chart or a 10-minute chart or a minute chart, 60-minute chart, 15, hourly, daily, weekly, monthly, right? All of those charts represent a time period for each candle. Okay, so each candle represents that time period. So if you were on a 5-minute chart, then each candle represents 5 minutes of trading. Okay, so, and what happened during that time period? So look at this red candle, for example. At the beginning of that 5-minute, let's just say exactly at 9:30 in the morning, when it opened at this price. Okay, and what happened during that time period? It could have gone as high as this wick right here and as low as this wick right here during that 5-minute period. So price traded between this time period from here to here. It opened over here. However, at the last trading during that 5-minute, it closed over here. So remember, it opened here and it closed over here in that 5-minute. And because it opened here and it closed below the opening, it becomes a red candle because the bears took over. There's a lot of selling pressure in this candle, and that's why it closed. Okay, and this red part is called the body. And the same goes true for a green candle. A green candle means that it was bullish period during that 5-minute. And so what happened? Let's just take the same example. 9:30 in the morning, when the market opened at 9:30, the price started trading over here at this price, and it went as high as here and low as here, but eventually it closed at here. And because it closed above the open, that's why it's a green candle. Okay, I hope that makes sense. And between whatever happened in between the open and close, that represents the body of that particular time period. And now, when I say I give you an example of just 5 minutes, that just represents 5 minutes. Now, if you were looking at an hourly chart, now each candle represents 1 hour. Okay, now when that candle represents 1 hour, that means that in this 1 hour period, this is what happened. Okay, so let me go into the next slide and I'll show you. In a bearish candle, again, it opened here. Okay, now it doesn't mean that just because it opened here, it didn't go up as high. So it went up as high as this price. It traded here, but then the bears came back and took it all the way back down as low as here. And eventually, it closed over here. Okay, and the same goes true for a bullish candle. It opened here, the bulls took it up, the bears might have brought it back down as low as here, but then the bulls came back and closed it over here. Now, in the picture, it doesn't give you justice because you're just looking at one candle, right? But if you're looking at the real time, and I'll show you in a minute, when you're looking at the candle in real time, it could be fluctuating here for the whole 5 minutes, but then the last 10 seconds, it could have gotten it up as high as here and closed over here, right? So you really don't know what happened, like in majority of the time, right? And you can always pick that apart with a smaller time frame. So if you're, for example, if you're looking at a 30-minute candle, you can always look at a 15-minute, 10-minute, 5-minute candle to see where price was really, and I'll give you an example in a couple of slides up ahead, what really happened. So the next thing is indecision, because sometimes you'll see candlestick patterns like this, and you'll be like, oh, wait a minute, there's no body to this, and what really happened here? So in this case, price opened here, the bulls took it up as high as here, but then the bears came back and brought it back down here. What does that mean? That means that it opened and closed at the same price. So the bulls couldn't take it, and then the bears couldn't take control. So neither of the parties had control during that time period, and hence you get these type of candles patterns. And I explained to you in the part 2 of this lesson exactly what each of these candlesticks mean, right? In terms of like naming, like doji, and you got engulfing candles. I go into detail about what each of the candle types mean, so that you have an understanding of how to take note and learn from what's happening with price. Okay, and this is the same, another example, right? It opened over here, the bears took it as far as down here, and then the bulls came back and pulled it right back to price where it opened. And again, it opened and closed at the same price. And in this case, it opened here, the bulls couldn't take it, the bears couldn't take it, and brought it right back. Okay, and so these sticks, they're called wicks, right? Sometimes people call them shadows, and they have other names for them, but I mean, when you're looking at candlesticks, I like to call them wicks because you're talking about candlesticks, and it just makes, I don't know where this shadow came, the term shadow came from, right? Then, and it's just easier to differentiate what the wick is, right? So this wick just represents action for that entire time period. Okay, so now let me give you an example of how to look at it in terms of minutes versus hours and days. Now, say for example, how is an hour, like let's say for example, this was an hour long candlestick time frame, right? Now, how is the hour one broken down? Now, this could be a 30-minute, and this is 30-minute. So what happened in that 30 minutes? So in the first 30 minutes, this is what happened. It opened over here. The bulls took it up all the way up to here. It went up as high as here, went down here, but then ultimately the bulls won this first 30 minutes. But then the bears came on the second 30 minutes. They took it down all the way over here and then closed over here. So 30 minutes equals 1 hour. So in the 1 hour, this is how the 1 hour candlestick represents. Okay, now you got, let me see if I can draw. Okay, so in this 1 hour, you see this? It started here, and ultimately, even the first 30 minutes, you'll see that nothing happened in this area, in this section right here. See that? But then in the second half, so this plus this equals the whole 30 minutes. I mean the whole hour, 60 minutes. Right, so this is what the price action. So if you can look at it right here, it opened here. So in that 1 hour, it opened here. It went as high as, price took it all the way over here, the bulls took it all the way over here, but then the bears came back and closed right here. And they took it all the way as far as this leg and then they brought it over here. Okay, so this is the 30 minutes, and you know, it could this be the same thing as 10 minutes, right? So this could be a 5 minute, and 10 minute, right? So that's how candles are formed, and that's how candles work. Now, let me give you an example. Let me see if I can give you an example of the different types of candles that you can see. And I go over this in, again, module in part 2 of this lesson, and go over each of the different types of candlesticks that you can see during your trading, and you should be aware of, and so how you can trade them, right? Don't just blindly trade them because they're green and red. There are certain types of patterns that you'll see. For example, here, look at these two right here. You know, they show up, and you have different types of candles that they came up with, the different names, doji, engulfing, you know, gravestone doji. There's all different types, and I go over them. The hammer, and you should understand them, and it's great. And once you figure out the different types of candlesticks and what they represent, you can see that the bulls take over here, and you know, when the bears take over. Look at this one over here, this candle pattern. The bears just took it straight down. There's even no wick. You don't even see a wick on this one. The bears were so powerful during this time period, they just took it down. And then over here, they went and continued to take it down. But then ultimately the bulls came back and didn't let them fully close it. Okay, so you kind of see that right here. Let me go ahead and show you some another example. I'm going to the real live example of some of these. Alright, so here is the futures. Like, say this is an emini S&P future. You can see that's the candle that I just took a screenshot of. You can see all the different types, and you see these long wicks. Let me give you an example of a real-time one right now. Let's take a look at the pound. And this is a 5-minute candle pattern. As I zoom in, you can see. Alright, so let's see what's going on here. This is a 5-minute candle pattern, candlestick chart. And you'll see, let me go further down to a minute chart. You can see it actually moving. And so each of these, because I'm on a 1-minute chart right now, each bar represents 1 minute. Okay. And you'll see that this one is actually forming right now. Okay. You see how it's forming, and then once the 1 minute is over, the next candle will form. So every minute candlestick will form, right? And you could see some indecision making, like some consolidation here, and then all of a sudden the bulls come in, the bears come in over here, right? And then once you decide to get a understanding that you want to use candlesticks. I mean, there's others. There's Renko charts. There's just straight up line charts. Once you decide that this is, you don't really need a lot of technical indicators on top of this chart, because once you know how to read this, then you easily can identify what's happening with the bulls and the bears and some price action. You can identify easily some of the support levels and resistant levels, and see what's going on. So it's so much easier. So I hope you continue If you've already enrolled in this lesson, continue to part 2 of this lesson to understand exactly the different types of patterns that are available that you can actually identify and use in your trading patterns. And if you're not, please reach out to me, join any of my groups, Twitter, reach out to me on Twitter. Discord is the first place. You should reach out to join my Discord group. It's free, and you can ask me questions there. And if you haven't bought this lesson, I go into pretty much comprehensive details of trading, how you can trade, different trading strategies, how to, it's a comprehensive course I have. Just go to PriceIsKing.com, do a search on course. I have this course here that gives you almost 10 hours worth of lessons on how to trade stocks, futures, understand your risk management. This lesson is free. I put it on YouTube so that you can get a brief understanding of the type of trading methods that I use and how my lessons are formulated. Alright, so I hope you guys reach out to me, join this, subscribe to my channel, and like this video. Thank you.